everyone, welcome back. You're watching The Money Show, and it's time to get your mutual fund portfolio queries answered, because you must have lined up a lot of financial goals for yourself, but then you definitely need a strategy for each of your financial goal, and then to take you to help you strategize or formalize a strategy for your financial goal. Today I have with me Anil Rego, founder CEO, Right Horizons, and Anil is also connected with me on the phone, live with us today. Anil, hi, welcome to the show, and we also have our viewer, Mr. Adi from Dubai, who's connected. Hi, good evening. Thank you so much for sending us your question today. Adi, can you hear me?
Yes, I can hear you, ma'am.
All right. So the details that I can hear you, and you've been investing through SIPs and since last 30 months, and you say that you have 65% of equity funds, 25% thematic, and 10% hybrid, and you can invest for more 3 to 4 years. Is that right?
Correct. That is right.
Okay.
So
do you know the name of your funds? Do you also want to get your mutual funds checked by Anil?
So sorry, come again, please. The line was breaking.
Do you know the name of your funds? Do you know the name of your funds? Because Anil will definitely give you a strategy and look at your portfolio allocation, but it will help him better if he knows the kind of funds he has, and also because it's a portfolio that you want to stick to for 3 to 4 years. We also want to analyze it based on your risk appetite. So, are you aware of the fund's name? Can you give us your fund's name?
Because it's a list of funds right now. It's not in front of me. I'm somewhere outside.
Oh, okay.
But however, the investments are in large cap funds, mid cap funds, and then there is some there is an absolute fund. Then we are invested in some infra and power funds, like that. So it's
okay. Any specific corpus that you want to accumulate? Any specific corpus that you want to accumulate to this portfolio?
So the main question is that I'm going to invest for the next 2 to 3 years, and I'm going to retire. So I've got some lump sum investment to make now, and I can continue with the SIP for another 3 years. So I wanted
SIP is for 90,000. Okay.
90,000 per month. I can invest, and there is a lump sum amount of about 20 lakhs I can put now.
Okay.
So this is what I'm looking at. So the approach has to be, I don't want to be taking too much risk.
Sure. So since we don't have the details of your equity portfolio right now, we cannot deep dive into that. But then let's talk about the 20 lakhs conservative approach for 2 years. Anil.
Right. Correct.
Yes. So first of all, I think it's interesting that at 62 he's still looking at investing equity, and the portfolio as well is not actually conservative, because they are almost 65% equity funds and 25% thematic. Okay, apart from 10% hybrid. So effectively, over possibly 95% is in equity, and the other important aspect to look at it is 25% is thematic funds, like he spoke of, power and infrastructure. So,
which is exactly the reason why I was wanting the details of his funds also, so that, because talking about his time frame is just 2 to 3 years, and considering he's got a very aggressive portfolio so far, 10% in hybrid, but then what kind of hybrid, again, we are not aware of that. Which is why I wanted to know the fund mix, but it seems it is a long list which he doesn't have right now with him. So then let's talk about investing 20 lakhs for 2 to 4 years, since we don't have the current portfolio details. So let's just stick to what we can do. Anil, what do you say?
Yes. No, so the point I wanted to make is, actually, even though he wants to be conservative, the current portfolio is high risk. Okay, so that is something that I want to point out. The second is about coming back and saying, how do I look at investing this 20 lakhs? The market has already moved up. So we are not suggesting that you do it lump sum. The ideal one to do is to say, do a systematic transfer. You park it in a liquid fund of the particular fund house, and you choose your destination equity fund that you want into, right? And so you park it, for example, if you park 5 lakhs into one liquid fund, let's say the liquid fund, and then you do a systematic transfer into Nippon India large cap fund. Right? So if one wants to be a little conservative, then one would suggest that he looks at a combination of let's say BAF, which is Balanced Advantage Fund. One can look at maybe either an Edelweiss, or one wants to go conservative in an ICICI Balanced Advantage Fund is definitely something that he should look at. This will also help him post his 3 years if he wants to use some money for systematic withdrawals, because the Balanced Advantage Fund is dynamic asset allocation, which basically means as the market goes up, it goes into debt, and as the market comes down, it goes to equity. So this particular thing automatically ensures buy low, sell high, and it reduces the risk significantly. Right? So that is something that I would believe that a good part of it, maybe even anywhere between 25% or to even 40% of the portfolio can even just be in this one category. The second aspect is also keeping in mind where the market is, and possibly mid and small cap have moved. So, and also looking at his portfolio, maybe a large cap fund, one can look at a combination of either Nippon India large cap and say ICICI blue chip. So these are the two things that one can look at. And the last, maybe some allocation, maybe to either a multi-cap, like let's say an ICICI Blue multi-cap is where I would stop for him as a combination to take care of this particular requirement. And all of them, other than BAP, can be in systematic transfers. You're putting it in a liquid fund and then into each of these equity funds I mentioned.
All right. Adi, is there anything else you want to ask Anil? Okay, I don't think we have you on the phone line, but then let's move on. And do I have Raj on the phone line?
Yeah, that's
Raj,
that's fine.
hi, how are
here
you
on the
doing?
line.
Good evening.
Yeah, fine. Good evening. Thank you, Sita. Yeah. So I just posted a list of my mutual. Yeah, can you hear me?
Yeah, I can hear you.
Yeah. So I posted a list of my mutual funds on the line, and I just want to, currently my investment is around 1 crore. I just want to know how much time, if I hold on to the same funds, can I turn it to around 5 CR? What is the time period, if I'm investing like 1 lakh per month, and, how I could, convert a corpus around 90 lakhs to, yeah.
You are comfortable with having 10 funds in your portfolio, is that right?
No, I currently have 10 funds. It's not a question of comfort. I'm just having 10 funds currently, but I don't know, should I size it down, what should I do?
Are you okay with the current fund mix that you have? Do you want a suggestion on the current fund mix as well, or you just want to understand when will this money multiply and become 5 CR?
Yeah, that's number one. And second, I can, take some fund suggestions also.
Okay, sure. Anil, your take on the funds?
Yeah, so one of the things I wanted to point out for him as well is, you have the power and infrastructure fund, which is a thematic fund, and that is the highest risk there. So, in fact, I put it as a sell, but I'm suggesting, it can be a phased one, so that as, let's say, the fund does better, it's done pretty well for him. Okay, but it is sectoral, and if there's a turnaround sometime, I would believe that you can even look at maybe a year or two, not necessarily in a very short term, in a phased manner, as and when you see spike in the particular portfolio, maybe take some money out and transfer to, say, another fund from Nippon itself, we can just switch it into. That is one. The second aspect, Bandhan Sterling Value Fund is something that I think, we can do away with. Motilal Oswal Nifty Small Cap is another one that I'm just saying in a phased manner, because small caps have done well, where he should slowly start looking to book profits and unwind it, over a period of time. Okay, so this is a little bit more for managing risk than anything else. Okay. Now coming to this question of, he would like 90 lakhs to grow to 5 crores in 5 years. I think that's highly unlikely. Okay, that because that means it's almost like a 41% annualized return to achieve this. Right? You may find some returns high at a, let's say, a small cap for a period of time and stuff like that. But typically, if you go back and see markets deliver 12 to 15%, even if you see, the BSE, right, from inception has delivered almost like 13.8%. Right? So keep that in mind. And I think if you go slightly aggressively, maybe you can touch that 15%. So assuming even an aggressive stance, right, it would mean that at 15%, his portfolio will go to 1.81 crores, right? If for example, his portfolio delivers 20%, is good for him. Okay, there will be upside there, but I would rather, while planning, be a little conservative. Now, if he wants to do all of this again in the next 5 years and hit this 5 crores, this deficit that he has, he would require to go an SIP of something like 3.5 lakhs per month. Okay, so if he does that, then he will be able to achieve. But possibly, maybe the other way is to look at a time frame which is slightly longer, and accordingly say that with 5 can he move to 10. Okay, if he's not able to do this 3.5 lakhs rupees per month.
All right. Is there anything else, Raj, you want to ask Anil?
That if you have a 27 to 28% return, probably you can convert a lakh or lakh and a half into 5 crores in 5 years. That's just based on a calculator. So that is the reason I just can clarify on that.
Okay.
Because I think with a 27-28% return per year, if some of the funds are giving, probably you can touch nearly 5 crores in 5 years. Like he's saying, around 12 to 15% return for that matter. So don't we get much more than that?
Okay. Anil?
So my point is, this is past returns, and what you must keep in mind is, and this is history, you can go back and see even a mid-cap index or a small-cap index has not given 27% compounded since inception, right? So it does give it for a shorter period. And my point is, if you are able to achieve that, it's great, okay, but I would not plan based on it. Okay, so I would rather go conservative in planning. And what typically happens is this: markets either correct after a cycle, and secondly, it may correct by time. So just to give you an example, if let's say markets have given a 50% return on a single year or a particular fund, and if it goes sideways for a year, it comes down to less than 25. If you look at on a compounded basis, right? So that is, you must keep it in mind that as we go forward, we cannot assume that these returns will continue. You should enjoy the period when it happens, and also take it away, book some profits, and sort of enjoy the gains from it.
All right. Thank you so much, Raj, for sending us your question. And with that, it's time up on the show today as well. Anil, thank you so much for being on the show and helping our viewers with their portfolio queries. I'm going to leave our viewers with our WhatsApp number and email ID.